Good afternoon, everyone, and welcome to today's webcast. We're very happy that you're with us. Today, we are continuing our series of the DBS COVID-19 webinar series, trying to give you information to help you navigate the uncharted waters that we're all facing in today's uncertain environment. And today, we're joined by two very special guests. So I'm very pleased to have with us today Todd Petit and Austin Bichler. Todd is Assistant Vice President and Actuary for the Advanced Market Solutions, Specialty Markets, and Life Training. Wow, Todd, that's a mouthful. At Allianz Life. And in this role, he manages Advanced Markets team and advises them on the uses of life insurance and annuities, as well as training the life insurance employees across Allianz in all new concepts and products. Todd, welcome to our webcast.
Thanks, Kurt. Happy to be here.
Oh. Yeah, it's great to have you here. And we also have Austin Bichler with us. He is Senior Director Actuary, and he leads the product development for new life products for Allianz Life. He has been with Allianz 13 years, and he has had extensive experience with Allianz's world-class hedging platform and helping to manage Allianz's hedging strategy for many years. Austin, thank you so much for joining us this afternoon.
Thank you for having me.
All right. Well, hey, let's get started. And before we start, for those of you that have been with us in the past, this will be a reminder. For those of you that are new, welcome. If you have questions, and we really encourage questions. In fact, we encourage questions so much this time that our friends at Allianz have put a bit of a bonus on the table, I guess we can call it. For those of you that do participate and ask questions along the way, Allianz will be sending you a small gift in the mail subsequent to this meeting, so we're appreciative of that. But if you want to ask a question, the way you do it is you simply go onto the chat feature in Teams, send a chat message, I will see it, and we will bring it into the conversation with our guests today. All right, well, let's get started, and let's move to our first slide. And Austin, I'd like to start with you. Could you just give us just an overview of the financial status really at the present time, and maybe how Allianz has been able to weather the storm today?
Yeah, so obviously the environment today is interesting to say the least. This first half of the year so far, it's weird to say it's the first half already, June's almost done, has been a tumultuous time, and really no insurance company has been immune to what's been going on, Allianz notwithstanding. I will say, though, that if you look at where we came out and where we are currently, we are still in an extremely strong financial position. Our ratings are very strong. AA, A+, A1, coming off a very strong 2019, so some really good momentum. And I think it's important to look at this financial crisis compared to how financial crises have gone in the past. I was with Allianz in 2008, 2009 in the financial crisis back then, and we had to make some pretty significant changes to our products. We had to cease selling variable annuities for a little while. We actually needed a capital infusion from our parent company back in 2008, 2009. Looking at today, it's a much different story. We actually paid out a dividend to our parent company in the first quarter during the middle of all the financial ups and downs, all the volatility that was going on in the marketplace. And that really shows the strength of Allianz and Allianz Life and where we're at today. Part of the big reason why is we planned for this. We learned from the 2008, 2009 crisis, and we now put playbooks together for just this type of environment. We have something what we call the 1% and 0% playbook, which really is a product and a company management philosophy and strategy of what to do if interest rates go this low, what to do if volatility is this high, what to do if you're seeing the credit markets move the way they do, so that we were prepared. We knew that, all right, we're going to have to make product changes. We knew that that was an inevitability, but we knew that the changes we were making were going to be correct, and we knew that our products were still going to have a lot of consumer value in them, and that we'd be able to weather this storm. And I think you look at how we've been able to stay so steady and so stable is because we had this playbook in place. Now, backing everything else is our very strong investment portfolio. This portfolio is still 99% investment grade. We haven't changed that philosophy at all. It's a philosophy that really lets us weather these types of storms, and that has kept overall the financial picture, the financial health of Allianz Life very strong during this time.
Yeah, I think that's tremendous, and that that's comforting to hear, because as you and I both know, it's been a challenge for many companies. And as you look, if you step back from Allianz for a moment and you just think across the industry, what type of challenges are folks in your position and Todd's position across the industry facing right now? And not everybody has a playbook.
Yeah, you can look at it at any facet. Low interest rates means our investments aren't earning as much, which means we have less to spend on products. We need to come up with creative solutions there. The high volatility in the marketplace means that hedging costs have skyrocketed, and we've seen a lot of life insurance companies have to make cap changes, some significant cap changes. Now, we rolled out with cap changes earlier this month, but if you compare them to the industry, we only had to move a little bit. We didn't have to change everything. We have options in our book in what we sell that didn't need to change at all. And I think that's the key part of what Allianz can offer, and what sets us apart from others, is that because we're not just focused on the S&P 500 point to point, which those prices skyrocketed during the market volatility went through in the first quarter and second quarter. We didn't need to make changes to our BUDB allocations or our PIMCO allocations. We were actually able to raise caps on our monthly sum allocations. So having that diverse set of different options for customers to choose means different options are going to behave differently in different environments.
Yeah, and that leads into our next question, which is where are you going to go for yield? And you've already talked a little bit about what's expecting for caps, but you want to talk a little bit more about that?
Yeah, yield is an interesting question right now. As an insurance company, we know yields have come down, interest rates have come down, so that leaves us with a decision to make, and I can clue you into what we ended up deciding. We could chase yield. We could chase higher risk investments. We could chase more unique investment opportunities to try to keep our yield as high as possible, or we could stick to our investment philosophy. And really, we chose the latter. Sticking to our investment philosophy, we want to make sure that our bond portfolio, which is almost $150 billion at this point, is stable and will be around for the next 20 years, 30 years. People aren't buying these products for the return that they're going to get over the next 3 years. It's the return you're going to get over the next 30 years. So it's really important to have very strong backing to those returns, and that's what our general account portfolio does. Now, that's not to say that we're not looking for every opportunity that we can. We know that certain sectors are not that good right now. Energy, the travel industry, hospitality have all taken very big hits, but it also leads to certain opportunities. And that's where we can partner with one of our sister companies, PIMCO, who is also owned by Allianz SC, our parent company. And they help us find the best buys for our risk profile. We work with PIMCO directly and say, PIMCO, we have this risk profile that we need to hit. This is our risk profile that we want, but help us find the best options that fit this risk profile. And then being the bond experts allow us to find those best buys, if you will, in the sectors that we're looking at, and allows us at least to be more efficient in what we're buying. And that has really helped keep our yield higher during this time.
Yeah, that's great. Well, I think it's important for folks, and we have a lot of individuals that work with DBS that are financial advisors and money managers. So I think it's important for them to have an understanding of really what you and others are doing to try to prepare for the pressure to try to get to increased yields. I want to switch gears though. There's been a lot of talk, Austin, about the something called AG 49 Phase 3. And I think there's some horror stories out there that I'm hearing, maybe rumors. So what can you tell us? What do you think that's going to do? And And IUL is so important to a company like Allianz. What does this mean to the future of IULs?
Yep. So AG 49 phase 3 is coming. That horse has left the barn, if you will, left a while ago. Regulators said this is the direction we want to go with the regulation. So what do we know? We know it's coming. We know they're going to be impacting the way specific products with multiplier bonuses illustrate. Now, the key word there is illustrate. None of the product features are actually changing. None of the value that these products offer is changing. It's simply the way that something can illustrate. We expect this illustration regulation to be in force either November, December, January timeframe, somewhere in those 3 months is our best guess right now. And the impact is going to be, side by side, it might be a little shocking to see the change in an illustration today because these multiplier bonuses have become so prevalent. Allianz has them. We believe in them. We know that they offer a lot of value to the customers, but how it can illustrate is going to change. So that's where then the onus is put on us as a product development team and as a marketing team and with Todd as a distribution team to say, all right, the illustration is going to change, but the underlying product isn't. So how do we think of new creative ways to sell the value of that underlying product? And we're working on a lot of ideas right now, ways to enhance our illustrations just to make them read better and show more value outside of the pure ledger values that you see. Some more unique analyses that we can do still within the frame of AG 49, but doing a sort of Monte Carlo analysis and showing what are the potential ups and downs of an IUL illustration, and really getting back to thinking about, all right, what are our value propositions as a company that Allianz can offer, because we know we offer a lot of value in our IULs, and how do we sell those? Knowing that we might not be able to rely on the illustration as much, but rest assured we are finding creative ways that we're going to be able to market these things and illustrate them. And honestly, too, we'll be looking at product changes to better fit the regulation, product enhancements, if you will.
So Austin, we got our first 2 questions. So I guess somebody wants the free Allianz gift. So that's great. But the first 2 questions have come in. The first one is, can you just briefly, not a detailed analysis, but maybe just a real high level, what is phase 3? What does that mean? And then I've got a follow-up question when you're done with that.
Yep. So phase 3 is really the regulators didn't love the popularity of the very high charge, very high bonus products out there. Given the current regulation and the way an illustration works and presents itself, the risk and reward trade-off can't be shown that well under the current rule. Regulators didn't like this, so they have gone down the path of limiting the performance of multiplier bonuses. So if you have any type of bonus that takes your index credit and multiplies it up by a factor, that is going to be limited in phase 3 of this AG 49 regulation.
Okay, so your product may indeed still have the benefit of a multiplier, but it won't be used in the selling process as far as using an illustration ledger to show that and say, well, look, that's where you're going to be. Is that correct?
Yeah, it's going to be complex. That's one thing I would say I don't love about the new regulation is it's going to make the illustrations a little more complex, but the short story is you won't be able to show as much benefit from the multipliers that you can today.
All right, so our follow-up question, somebody said, okay, so it is coming at the end of the year. What should I do as an advisor to prepare for this?
That's a great question. And like I said, one of the ones that we're trying to think of as well. I think a big piece is going to be just knowing that the change is coming, knowing that come December 1st or whenever this goes live, the illustrations that you're running are going to change. So if you're running an illustration at the max AG 49 rate today that has a multiplier bonus, you can probably expect the cash values on that or the loan solve income amount on that to go down anywhere from 10, even upwards of 25% in some cases. So there are some big movements here. So what can you do to prepare for that? One is start looking at how you position this outside of the pure illustration value. Make sure you have the marketing message. Ping companies like Allianz and ask us, hey, what are you going to do to help sell these products in the future? How are you going to illustrate the value? There's probably going to need to be more focus put on the other marketing collateral out there and the marketing ways out there than purely the illustration.
Well, I couldn't agree with you more. What I was thinking when I read that question was, back, we'll just say a couple of years ago, or maybe longer than that, when I used to be in the field and was an advisor, and we'd have various cases. Some of the cases that really went the best were those where you didn't focus on the illustration, you didn't focus on the ledger, you focused on the need and the concept, and you talked about how it worked, and you really started talking to the clients about that. And the ledgers then followed after the sale was essentially solidified. So we'll wait and see the good things that you come up with. I want to turn over to your partner in crime on the call today, to Todd. And Todd, I'd like to get your view on illustration rates. We heard Austin talk a little bit about illustration rates and how those will probably be impacted by phase 3. But what's your view on realistic rates?
Yeah, thanks, Kurt. Good afternoon, everyone. And just if I could chime in a little bit, Kurt, on the prior question about what can you as an advisor or you as marketers do to prepare for this. Just, I think one other thing, I'm not sure if Austin stressed it enough, is that this is only going to apply to illustrations going forward. So that's very different than the regulation phase 1 of AG 49 that was put into place in 2015. Where it applied retroactively. And so all of a sudden, maybe illustrations you had sold 5, 6, 7, 8 years ago, you weren't able to show the benefits that you showed yesterday. And that caused a lot of confusion. And the carriers were very insistent upon that this time with the regulators. Please stop causing that confusion. If we sold the product with a multiplier and you were able to show a client those benefits of the multiplier, please let us continue showing that multiplier as that client owns the policy for the next 20, 30, 40, 50 years. And they did hear us this time. So for the people that you're selling now, really there's nothing to prepare for. They're going to see illustrations that show the benefits of those multipliers, and it's really you as advisors or you as marketers that have to be aware that when that switch gets thrown, the products will look differently, but not work differently, just look differently. But I love that statement you made, Kurt, about the best sales are often ones that aren't focusing on the ledger themselves, which I couldn't agree with more. But nevertheless, ledgers are a part of our world, and we have to put in illustration rates. So, yeah, if you ask 10 different marketers or even 10 different actuaries, what's the realistic illustration rate? Unfortunately, you'd probably get 10 different answers. And there's very little good guidance out there about what can I really expect. It gets complicated quickly. I've always had a rule that I've lived by, and I think it's served us well. And Allianz's data backs this up. I think a realistic illustration rate is about 2% above the fixed account rate of the company. And why do I think that? Okay, well, the fixed account rate is, as you know, Kurt, is something that you can take, and that's a credit for your client. It's an absolute guarantee for the next year. Or you can give the company that money, have the company use it to buy some sort of hedge instruments, and then those instruments will return something. Now, if you're giving us that fixed account return with Allianz, that's 4.5%. You're expecting more than 4.5. Otherwise, why wouldn't you just take the 4.5? And so historically, we've seen, we have theoretical models that are predict what a risk premium should be for an IUL type construct, or we have our actual history. Either one indicates that there's about 200 points of risk premium for an IUL and for the types of investments that are behind it. So, if Allianz is at 4.5, a realistic illustration rate is 6.5. And I think you have to do a little bit of digging to say, well, where do I think that fixed account rate of Allianz is going? 10 years ago, that rate was probably closer to 5.5. And so I would have been telling you at that time, if you believe interest rates are going to stay where they are, that 7.5 is a realistic rate. Well, interest rates have come down. Now they're 4.5. We're certainly putting on new money at lower rates than 4.5 today. As everybody knows, rates are extremely low. We're predicting our portfolio to drop maybe 15 basis points by the end of the year from 450 to 435, if nothing else changes in the market right now. And so that would indicate that next year the best rate is 635. And you could, go nuts trying to guess where the interest rates are going to go. But I would say 650 if you believe market rates are stable, maybe 6 if interest rates are going to go lower, and maybe 7 if you believe interest rates are going to rise significantly. The good news is the illustration lets you choose any of those options I just talked about. Most carriers you can illustrate 6, 6.5, or 7, and that's the flexibility of AG 49, letting you see various patterns. But I think very few people understand what does it mean to choose a 7 or 6.5 or a 6. I wouldn't get any more complicated than that. If you remember nothing else from the 3 minutes I just blathered on, add 2 points to the company's fixed account, and I think you've got a realistic illustration right there, Kurt.
I think that's a great answer, because too many times people get into what I call illustration wars, right? And it's whose illustration software can drive the best numbers. And at the end of the day, that really isn't the real world the client's going to live in. They need to live in the real world, and I think that's great guidance. So thank you, Todd, for that answer. I want to go into the other part of your world, and that's around premium finance, and it's a world that I know and love very much as well. And we've done at DBS, we do a significant amount of premium finance and a fair bit with your company and others. How do you think the current environment has been impacting the premium finance business from your standpoint?
Yeah, this is a great question because there's so many elements of premium financing. As you're aware, Kurt, as I know DBS is a student of premium financing. Like Allianz, you've been doing it a long time. We've been doing premium financing since 2005. We have a very robust block of business that has performed exceptionally well. The lapse rates of premium finance are half of that of the lapse rates of traditional business. So this is an indication that the financing has worked for Allianz, and it's worked for our customers because they're keeping their policies that were sold 15 years ago, 13 years ago, 2 years ago. So I think it depends, and I hate to give that answer. It's a politician's answer, and it's not fair. But I think for Allianz, we will see relatively little impact, to be quite frank. What's happening in the marketplace is fairly short term. We always take a long-term view on premium financing. And if anything, premium financing just got a little bit easier, which does scare me a bit. Premium financing has always been about, can I borrow money from a bank at a lower rate than I can get with that money I've borrowed? So can I borrow money at a bank at 3, put it in an IUL, and after all fees and everything, maybe I can net 4.5 or 5. And so I borrowed at 3 and I earned 4.5 or 5 on that, and that's great. That's the greed angle of premium finance, and that can work. Another angle of premium finance is simply I'm a wealthy individual, but I'm illiquid, or I have a better use for all of my money. And I'm going to keep it in my main business line, but I need this insurance protection and I need the coverage, so I'm going to borrow the money and put up some of the other things as collateral. And of course, those are very typical uses, Kurt. What I would say for how has it impacted the business? With interest rates really, really low, borrowing rates are very, very low. So it makes bad designs look feasible. And that's the part that scares me. Maybe not the answer you were expecting, Kurt, but I really think the fundamentals of IUL are set to deliver those long-term returns that we've come to expect. So that 6 or 6.5 or 7 that I was talking about earlier, I don't see our ability to deliver those types of returns as unchanged in the long run. That said, borrowing costs are really inexpensive right now. And so if you can borrow money from a bank at 2.5 or at 3, and you can illustrate it at 6, 6.5, 7, that's going to make any program look amazing. And that worries me a little bit because there are better programs out there, Kurt, and you know that as well as I do. There's programs out there that are client centric, and there's programs out there that aren't, and maybe promising free insurance or no non-recourse, and lots of characters out there. But I think for the companies that have been doing premium financing a long time, that take a long-term view, I think premium financing continues as normal, with the caveat, and it's a good thing actually, right? Because what we're seeing is people actually borrow for 10 years at the fixed rates. We've never seen fixed rate bank loans in the premium finance segment. All of a sudden, that's a reality now, because you can lock in a rate of 3.5, 3.75 if you've got enough assets, and you can lock that in for 10 years. That's a pretty fantastic opportunity. So I think there's opportunity to screw it up and have bad designs enter the marketplace, and we're certainly on guard for that, and I know you are too. But there's also amazing opportunities for those that can seize this time of really cheap borrowing. So I'm actually excited about the current opportunity for premium finance business, Kurt.
Yeah, I'd have to agree. I mean, in my practice company, when I sat in a carrier chair for a couple decades, I definitely know what you mean about buyer beware and seller beware. We need to be very careful of what may be out there. I would also go back to one of the prior webcasts that we've had, and I think was called The Silver Lining. And Terry Getman talked about the need for estate planning and how important that is, especially for the affluent right now, with the potential changes that could happen in the White House and what that could do with the potential changes in the legislature, and what that could do to estate taxes, and the need for the wealthy people to really be moving on their estate planning needs. And I can tell you from DBS's standpoint, I've never seen this much, and for those that have been here longer than I, no one has seen this much premium finance activity in years. And I think one of the drivers is the need to start doing some estate tax planning now, because people really foresee that's going to change. And the second is, as Todd pointed out, the really what I would call inexpensive money is making it makes sense to people. And so I'm excited as well. But if you have questions, make sure you reach out to DBS. We have the expertise, and we'll help you navigate through working with partners that we believe are solid partners to be working with in this marketplace. All right, Austin, I'm gonna pivot back to you now and pull up our next question, and talk to us a little bit about non-correlated index options. And boy, in an economy like we're dealing with right now, in a market volatility we're having right now, and non-correlated is really the word of the day. Can you talk about that in the index context?
Yeah, exactly. It's an interesting time to find a indexing solution that's not moving exactly in the same direction as everything else. I think we've seen correlation among even equity classes hit all-time highs. But to me, what this non-correlated index options means and why it's valuable in an IUL, it all comes down to choice and potential diversification. That's one thing that Allianz, we pride ourselves in, and we are an indexing company. We are indexing experts, from how we built our hedging team to how we build our product design. It's all focused around indexing. And that means we have a lot more options than your simple S&P point to point with a cap. We have indices that balance equity and bonds dynamically on a daily basis in order to meet a volatility target. We have static blends that include international exposure, small cap exposure, and bond exposure to come up with a slightly different return profile. We have different crediting methods too, something like a monthly sum crediting method. While it's tied to the S&P 500, it really starts to leverage up some of the ups and downs that you can achieve on an IUL, depending on the marketplace. And all this being said is that non-correlated to me means opportunity for diversification. We've got some good marketing pieces out there, and I've been part of the research behind these marketing pieces that shows, as much as you might think of, all right, here's the current market environment, here's the best allocation for my client to be in, we're likely going to be wrong. If you ask me today, where should I put my money, I'm going to give you the canned answer of spread it out among a few different allocation options, diversify. What we see from that is, generally, you might not have as high of highs, but you're not going to hit as many zeros. You're not going to have as many lows. And knowing, once again, that When we look at an illustration, those are, just a steady return year over year. That's a better experience for the client. So if you can spread your allocations around, for Allianz, put some in the BUD-B, some in the PIMCO allocation, some in the blend. Use S&P point to point for part of it if you want to. But that mix then gives you the ups and downs. A good example of this is what happened recently. Now, if I would have told you a year ago, so maybe even like 14, 15 months ago, you should definitely put your money in the BUD-B, you might ask why. I would say, well, I don't really know why at that point, but that would have been the right answer. And what we saw was throughout 2019, equity performances were great. So your S&P points to points were up, your volatility controlled indices like the BUD-B were up, monthly sum was up, but then of course 2020 happened and we saw volatility spike and equity go down. What our BUD-B did in that situation is exactly what it's designed to do. So it has a canned methodology. We can't change it at all. It just does this automatically in the index. Is when volatility goes up, the index automatically allocates away from an equity account to a bond account within the index itself. So what we saw was when equity volatility spiked back in February, the BUD-B index got out of the marketplace and essentially went into the bond market and saved the returns. So looking at what was happening in March and April, we had clients that were allocated to the BUD-B that were getting 10% credits when the S&P was down 5% year over year, and the majority of the industry was getting 0%. And that's the benefit of this non-correlated index options. Now, if you had the foresight to just pick BUD-B, great, you got that 10% credit, but maybe you would have been, you put 25% in the BUD-B or 50% in the BUD-B, but you're still getting a credit in that situation. You're still getting some credit, you're still pushing the policy forward, and that's the importance of having these non-correlated index options and having the choices that we do offer.
I got to tell you what I think that's excellent, and what it tells me is none of us, even guys as smart as the both of you, know what the future is, and there is no such thing as a crystal ball. So finding a carrier that has multiple options allows you to be insulated from some of the volatility that we're seeing in the marketplace, and so that makes a ton of sense. And yeah, I think non-correlated index options are critical for long-term success, without a doubt.
Yep.
You know, Todd, as I looked at the next question, it struck me that as a former VUL product manager, I remember when these IUL newfangled things are coming out, and I was like, yeah, that's not in my wheelhouse. I'm not really sure about that whole deal. So talk to me a little bit, Todd, about how have your policies, or maybe even generically as you see the industry, how the policies really held up since they started getting sold?
Yeah, certainly, Kurt. It's a great question, and we make a lot of claims about how amazing an index product is. No market risk, no risk of market downside, and yet some access to the upside. And a lot of people, it sounds like you included, Kurt, when these first came out, 15, 20 years ago, were extremely skeptical. That's not possible to do that. You can't make that promise. These are a fly by night. Allianz, being one of the very first entrants into the IUL arena, fought a lot of that, and not just for ourselves, but because we believed in the industry. Today, IUL represents 25% of new life sales in the U.S. So I think the days of people saying, IUL is a fad or not long here is gone. It's a significant part of the life insurance marketplace, really eclipsed only by whole life, which I think makes up somewhere around 33%. So it's the second largest segment of the overall U.S. life space. It's here to stay, and it's gotten its traction because we've educated people on the benefits of IUL, and also, Kurt, because it's delivered. It's really done well. Now that I'm in distribution and moved away from the actuarial realm, I can definitely point to things that maybe I wouldn't have as an actuary. But for anybody that wants it, and I'm happy to send it over to you, Kurt, Allianz responded as part of our AG 49. We responded to the regulators saying, look, here's our book of business. Why don't we just show you how it's done since 2005, since we've been in this? If you look, Kurt, at the data, and Austin and his team put this together, and we have more slick brochures than this really boring technical letter that we sent to a group of regulatory actuaries. Dave Grunsner can get you over those, and you can share those however you need. But we've got pieces that show our history. And if I look at this, Kurt, the worst you could have done is you could have bought a policy in 2014 with Allianz. If you were, I'm going to put this in quotes, unfortunate enough to buy a policy in 2014, your average index credits were only 6.3%. If you had bought in 2009 after the recovery, your average credits have been 8.7. So, if you see that range of credits, and these are not, hypothetical, let me look back and see what this index would have done had you invested in it. No, I'm talking about the people that actually bought an Allianz IUL in 2009 and have, all of their credits, take them all, from 2009 to 2000 and the end of 19, how have they fared? Their actual credits have been 8.7%. So IUL has delivered on its promises. And we've got this boring technical actuarial document, which I think is, I think it speaks really loudly as to the power of IUL. And then we've got some marketing pieces that cover our history in a little bit less detail. But either piece shows that IUL has worked for the consumer. It's why we have gone all in on IUL, because we love the story and we know marketed correctly can do wonderful things for the consumer.
Boy, that's great to hear. It really is. And there's an exciting story to tell, and you have some upside potential. You can participate upside, and you have a little bit of protection on the downside. And as I looked at my VULs that I own, as the market did its sale earlier this year, I more than once thought to myself, man, I wish I was in an IUL, because I wouldn't have to deal with these negative things going on in my policies. So, and I would say I'm not alone. There are a lot of clients out there that probably have the same mindset. It's easier to sleep at night when you have that downside protection, for sure. Well, let's switch gears just a little bit again, and I want to go back over into your sales side and talk about business and the impact of COVID. And I really want to hone in on foreign nationals. And I know that Allianz does a fair bit of business in the foreign national space, but probably not recently, is my hunch. So talk to me a little bit about that, Todd.
Yeah, certainly. COVID was a scary thing for insurers. You can see, if you're seeing the video here, by the grayness of my beard, I've been around a bit in the industry. I cut my teeth actually during the AIDS pandemic, or the AIDS scare. It never really turned into a pandemic. And I remember back then even scrambling as a young pricing actuary to determine, oh my gosh, what's going to be the impact of this new thing we don't know anything about. And insurers were, adding some pads, or, changing the way they underwrote. And it was an interesting time to enter the industry. COVID was no different, right? I mean, I remember chatting with Austin prior to a meeting. This was when we were still face to face, and we were just chatting, and both saying, what do you think the impact could be? And, we had different numbers as to the potential impact on Allianz and on the industry as a whole. But certainly that hasn't really panned out yet, as an industry. So I think there was a lot of concern at first. And so a lot of carriers took a knee-jerk reaction to say, I'm going to limit, underwriting to people over 65. I'm just going to say no to them for now. Or, I'll make other adjustments that limit my exposure to this. And we just really haven't seen the, mortality impact on the insured population that might have been predicted early on when there was that lack of information. So I would say the footnote on COVID, if nothing changes, and it's a bit foolish during the middle of the pandemic to try to predict what the end is going to look like. But if we continue along this path where really the insured population is not hit that hard, carriers won't be making mortality adjustments. But what it has done that's been amazing, I think, and this is where I hope the legacy of COVID is, if there can be anything good that's come of it, is you've seen carriers make a lot of changes in ease of doing business. So Allianz in particular, I'll just point a couple of ours out. I don't think they're unique to us. I think you've seen other carriers do similar things. We opened up our accelerated underwriting to $3 million. That doubled the limit. We used to be at 1.5, we went to 3. Why? Because we had to. There was no other way to get life business through. Our accelerated underwriting now accepts standard classes, didn't used to. We've expanded exam substitutions. So if you had a physical a year and a half ago, that might be able to take the place of your paramed today. So carriers have found ways to say yes and to accept business, doing so responsibly under the COVID. And of course, we've all become better virtual marketers in this world. So I think it's done some good things. It's forced carriers to accelerate their technological challenges. You know this as well as I do. Carriers' technology is usually not good. Let's face facts, right? And it's forced us to accelerate that. So we've really stepped up our game. One of the really cool things we're looking at now is an underwriting platform supported by a major reinsurer that would be almost a no-touch underwriting. So this machine learning, if you will, would get the information about a client, and if it deems that it passes, boom, it's passed. And so you can see some really quick changes coming. So I think overall, knock on wood, Kurt, I think we might see some positives out of the whole COVID thing, and that's getting carriers to move more quickly with technology. I know you said to focus on foreign national business, so let's hop over to that. On foreign nationals, a lot of companies, nearly every company, Allianz included, really put a hold on it. We were seeing in the neighborhood of 50 to 75 applications a month in foreign national business. That's dried up to about 5 a month now, maybe 10 a month. And it's gone down so much because we've basically said, and all carriers have this same rule, if you're planning on returning to that country that you're from, we're gonna say pass for right now. Because of the travel advisory that's out there for all countries, anybody returning to a country is on hold. The only foreign nationals we can accept right now is a foreign national that intends to remain in the US. And so that is still seeing some of those applications. We just saw Symetra, I think, make a little bit of a move to reopen a little bit. I know Global Atlantic is pondering that as well. So I think you'll start to see carriers reopen their foreign national business in the next 2 to 6 weeks. They'll all be a little bit different about when they do it. And of course, if there's a second wave that hits, everybody will pump the brakes hard on that. I think we were trucking along very well. The program was doing well. Allianz is a great international name. We have to teach people in the US how to pronounce it via various billboards, and you had them right next to your office in DBS. I know that, so you probably saw those commuting to work, Kurt. We were teaching people how to say our names. Well, in the rest of the world, it's a household name. So it's a great company for foreign national business, and we expect that program to be up and running soon. Again, given that no second wave of COVID hits.
Yeah, I think that's absolutely right. And it's, the foreign national business is a great business, and one that hopefully you and others will be back in soon. DBS does a significant amount of foreign national business, and so we're excited to see that open up as well. We have another question. So again, remember, if you ask a question, our friends at Allianz will send you something wonderful in the mail. And Todd, I think this one goes back to you. The accelerated underwriting changes that were mentioned, is there a chance that they're going to remain permanent, or that the carrier will pull those back once it's time to go back to, quote, normal?
I'll defer that one to Austin because he did all of the work on this, and I'd hate to take credit for the work he did, but I think he's got something good to say there, Kurt.
Yep. So the change we recently made to start allowing standard, that is a permanent change. And we are going through the process right now to make the expansion to 3 million permanent. So that one's not done yet. I'll readily admit the ink isn't on paper yet, but the expansion to standard is a permanent change, and we are working to make the expansion to 3 million a permanent change as well.
So you know what that means, Austin? That means if they were smart enough to be part of the call today, they got some scoop. They don't, those that weren't here don't know. So
exactly.
Hey, Austin, what I wanted to close with our prepared remarks, I just want to talk about, your rate lock. And, in my mind, that's something that really sets you apart in the industry. And, having a discussion about rate lock is probably more time than we have left to really explain it. So I'll just say to the folks out there, if you've never heard of the Allianz rate lock, reach out to DBS, and our whole team would be more than happy to walk you through how that works. But for those who do know about it, can you just tell us a little bit how it's been utilized year to date?
Yeah, it's been a very strong story. So we launched the Index Lock with the new product that we launched back in August. So it hasn't been around that long, but we've seen some very good utilization so far, as well as some really good results. So being the actuary, I have to have numbers with me. So we have seen 75 contracts utilize the Index Lock or rate lock, and they have locked in on average a 9% return. A little north of 9%, and that's with the par rate and bonuses applied, which is a great story. Probably even more impressive is before the crisis hit. So this is before February 21st. We had 49 allocations locked, and those allocations had locked in a credit a little north of 10%. So put yourself in these people's shoes of they just bought a policy sometime between August and February, and they locked in their credit for the year at above 10%. So they knew that they were going to get a 10% credit. And this was before all the crisis hit. Then they were sitting back and relaxing as the market started to tank, as all the turmoil was going around. And they knew when I get to my policy anniversary, I'm going to get a 10% credit. Such a strong story. This is one of those pieces we're going to be looking at blowing out from a marketing standpoint, showing how Index Lock can work, how it's worked through history, and even highlighting this 2020 experience we've seen so far. But it's just it's a powerful story. There's some great uses in the premium finance world for it, of knowing exactly what your credit's going to be before a collateral call comes, and it's a way for the policyholder to, if you're happy with your credit, you can lock it and then not worry about the volatility or any movement the rest of the year. So it's a way to use peace of mind. A little plug for my hedging days of the reason why we're able to do this is because of our in-house hedging system we've built. We've built a world-class hedging platform here at Allianz Life, and that allows us to utilize this Index Lock feature. And that's why we don't think there's going to be many, if any, other carriers that will be able to copy this feature.
Yeah, Kurt, if I could just add on one statement there about the premium finance. Can you imagine, Kurt, you've been doing premium finance and know a long time, if the low point letter that you were asking for from the bank didn't have to show a 0% return, because you could show them a letter from Allianz saying, I've locked in a 9% return, and when the year end comes, the worst I'm getting is 9. That's just changed the game on low point letters. That changes
it dramatically. Absolutely. Well, guys, I'll let you collect your thoughts for a moment for a final word, and I'm going to switch over just for a second and just remind people of a couple of resources that DBS has. And this one in particular, I know I've shown this every week, but this is a very important one today. So out here again at our COVID-19 Resource Center, remember, you just go to the DBS website, you click on the red bar that says COVID-19, takes you to the Resource Center. And out here you see our electronic solutions, the paramed solutions. See if I can get my pen turned on here. Here we go. So the electronic solutions, the paramed, underwriting, and general information about for financial professionals. The one I want to draw your attention to is right here in underwriting. We had another change again this week. In fact, it came in less than 24 hours ago for one of the major carriers changing their underwriting rules. It is important that you are always going out and looking at the COVID-19 Resource Center so you can see exactly what's going on as carriers need to flip various levers and do various things. So if you have any questions, obviously just talk to DBS. We'll be happy to get you access to that area of our site. Terry Gatman, our in-house advanced markets attorney, continues to work on the pulse, and this gives you up-to-date information, what's happening on the Hill, specifically around PPP. She was just talking to me this morning about the fact that, man, you just get done working on something and then all of a sudden they rewrite everything. So, but it is very current, and there's a lot changing out there, and how the stimulus can be used to help your small business owners and what you need to know as an advisor. So another great resource, not only out here, but also to talk to Terry. And then finally, eSolutions Resource Center. Remember, there are ways that you can work with our carriers, our term carriers, and our permanent carriers, either through Fast Term or through iGo, to really help us facilitate a sale during this time of distance selling. We have the capability and the other thing I'll tell you is it's not brand new to DBS. We've been doing this for well over a decade, and we know how to do distance selling, and we're here to help you along the way. All right, well, when things get challenging, don't forget, you can always trust DBS. We're here to help. So, gentlemen, I'm going to turn back to you just for a moment. Any final words from Todd or Austin?
Thanks for your time, Kurt. I really enjoyed being here today. If any of you knew the underpinnings of the wirings of the insurance industry, the reserve requirements, the capital requirements, the strenuous stress tests that most of the time that you guys hate as marketers out there because it often means no or changes, don't panic. We've got this as an insurance industry. This is what the insurance industry was built for. Times of crisis is when the insurance industry shines. We are well capitalized as an industry, Allianz in particular. You heard Allianz talk about the dividend paid to our parent even during this time. This is when you want to be with an industry who is always thinking about risk in times of crisis. So we've got this.
Great. Thank you, sir. Austin?
I would echo Todd's thoughts. So first off, thank you for having us today. It was a joy getting to talk to you and answer these questions. These are the important questions, and these are the questions we hope you're asking all the insurance carriers you work with. As Todd said, the industry is strong. Obviously, we have a bias towards Allianz, but you should know all of these questions and be able to ask these questions of the carriers you're working with. And we're happy to answer these questions anytime. It doesn't have to be just on a webinar. Feel free to reach out to us, and we'll talk about Allianz all day long. Not a problem.
Thanks, Austin. Thank you both. This was great having you both with us today. And the thing to keep in mind for those of you that are out there, DBS represents a number of carriers, and we spend a significant amount of time with senior leadership at each of the carriers to make sure that we're working with only the best and the brightest out in the industry. So we are here to help bring you the solutions that can help you help your clients. Next week, we will have our very own Leah Mahoney. She is our new business director, and she will be joining us next week to talk about innovation solutions in tumultuous times, an inside look at how our carrier partners are paving the way and making it easier for you to be successful. As always, thank you for joining. Be well and take care.